All right, so I welcome you all to Target Professional Consults. Yes. Today we are going to look out for what you call special question solving on IFRS 5. That is non-current asset held for sale and discontinued operations. This is strictly question solving, practical question solving. And note the difference. When exactly they ask you IFRS 5, most often you will set IFRS 5 question, and many do not realize that this is IFRS 5. So they will apply a different standard. It happens mostly. If you don't write IFRS 5 in the standards for them, they will never account for it using IFRS 5. And this is very unprofessional. You must know the requirement. You must know conditions at which IFRS 5 will apply. If you see these conditions in the question, nobody should tell you that this is IFRS 5. And that is what you have to know. So the last meeting, we extensively look at the conditions. Take notice. The conditions in which IFRS 5 will apply. There are only two conditions, so two scenarios. Anytime you have an asset and the carrying amount can only be recovered through what? Sale, but not what? Use. In that time, IFRS 5 is calling you. If you have an asset at which the carrying amount can never be recovered unless you sell it, then IFRS 5 is calling you. You have an asset and you want to sell it. That asset originally, it wasn't meant for sale. But now you have made a decision to sell it. Then IFRS 5 is calling you. You bought a company, a subsidiary in a particular group of company. And now you want to sell that particular subsidiary. It is called disposal group. IFRS 5 is calling you. Anything about sale of a group, you have a strategic business unit, aka operating segment, IFRS 8. You have operating segment, and you want to dispose of one of your segments. IFRS 5 is calling you. These are the situation. Then the mere fact you want to sell an operating segment doesn't mean that we have to use IFRS 5. IFRS 5 have set conditions that you must comply with. If those conditions are there, then you can now account for it under IFRS 5. So take notice. Failure to understand this. What is it? IFRS 5, you use IFRS 9. You see IFRS 9, use IFRS 5, and you'll be swapping them for us. It's just because the actual conditions, you have not gotten it. And please don't learn any standard without learning. In fact, you must learn the conditions first. So my first question I'm going to solve with you, I'm only solving conditions. So to sound like a theory question, but very insightful, to bring out the theories. At what point can we say that this qualifies to be what? Disqualified to be classified under IFRS 5. Then the sale procedure will continue. If you don't get a condition, forget it. You can only answer questions only when the examiner have stated it clearly that this is what IFRS 5. So take notice of that, and then you'll be fine. So my first question will be, we pick from ICA, May 2016. I'll pick ACCA SIMA. I got all levels. So take notice. So ICA, May 2016, question 1. That year, final level students, they were interested in calculation of consolidation. They went, there was no console. As I'm now talking to you, we are still waiting for the console. It's not there. It's just a theory question we asked them. So let's go straight and do justice to this question. And I'm going to read it. As I'm reading, you must know whether this falls under IFRS 5 or not. All right, so now let's start. So there will be a lot of questions. How do you know that this is IFRS 5? So observe it from this question. Nowhere they've written IFRS 5, but upon reading, you must know that this is IFRS question that they are. First, read the requirement. It said discuss. Discuss. That means tell us a whole story. Arguments, issues, narrative, note, explanations, the appropriate accounting treatment of each investment in the consolidated financial statement of Avocado Group Limited as at 31st day of December 2015, 10 marks. Calculations are not required. Let me clap for the examiner. Why am I clapping? You see, in 2017, I set a particular question in quantitative tools in business. And I asked the same question that explain, but do not calculate. And I put figures inside. Plenty people calculated and explained it to me. And that's what the examiner wants to do, the same thing here. So here they inform you to explain, but do not what? Calculate. So calculations are not what? Required. So take notes. So in that case, you have to set the principle straight one after the other. So no calculation here. Tell us what to go to console P&L, console balance sheet. Tell us what to go to individual financial statement. You are free to go. Tell us any of the conditions they've got it right. You are free to go. Good. So now let's go. So they said discuss, but do not calculate. So it says that Avocado Limited is preparing its consolidated financial statement for the year ended 31st day of December 2015. Avocado Limited has number of investments in other entities. Details of this investment as follows. Investment in Aquadu Productions. Yes, come on. Aquadu Productions. Avocado acquired 12% of the issued ordinary share capital of Aquadu Productions on 1st of January 2010 for 10 million cedis. On 1st October 2015, Avocado acquired a further 45% of issued ordinary share capital for 45 million cedis. The fair value of the net asset as at 1st October 2015 was 120,000, and on 1st January 2010 was 80,000. The previously held interest in fair value on 1st October 2015 is of 17,000. This is not IFRS 5, so I will not say anything. Because today I am only solving question on the IFRS. How do I know that it's not IFRS 5? They are not selling anything here. They are not classifying anything for sale. They are not selling anything. They are rather buying more investments. So it doesn't qualify. That's all. So I move on to the next one. How we get? So this one is just increasing in control or acquiring additional. First they had 12 and now they acquire 45. Control is established. The goodwill must be calculated. That's all. Once control has been gained, goodwill must be established. They can use the fair value model or they can use the proportional interest. You explain it that way. You are done. There's no IFRS 5 here because they are not selling anything. They are not classifying anything for sale. Let's go to the second one. Investment in Akpakpa Ventures. Investment in Akpakpa Ventures. Avocado Limited acquired 90% of the issued ordinary share capital of Akpakpa Ventures on 1st of March 2015 for 6 million. When the book value of net assets was 5.8 million Ghana cedis. The fair value of the net asset was estimated at 6.8 million at the date of acquisition. The difference between the fair value and the book value of the net asset related to depreciable property with the remaining useful life at the date of acquisition of 40 years. Here too, they never said they are selling anything. So IFRS 5 will never hold. This is typically fair value adjustment with reference to IFRS 13 and IFRS 10 consolidation. So this is what? Fair value adjustment, which will result in additional depreciation. You are done. If you explain this, you are done with the story. Let's go to the next investment. Investment in Watery Impacts Limited. Watery Impacts Limited. At the date of acquisition, at the date of acquisition of Akpakpa Ventures Limited, Akpakpa Ventures Limited held 65% of issued ordinary share capital of Watery Impacts Limited. The operations of Watery Impacts do not fit within strategic plans of our avocado. Look at something. You see, at the date that the parent acquired a subsidiary, Akpakpa Ventures, the subsidiary also held 65%. He also owned a particular another subsidiary, we call it sub-subsidiary. So Akpakpa was acquired by the parent company. The parent company is called Avocado. Avocado acquired Akpakpa, but at that date in which Avocado acquired Akpakpa, Akpakpa also held 65% of the ordinary share of Watery Impacts Limited. The operations of Watery Impacts do not fit within the strategic plans of Avocado Limited. Wow. What do you think will happen? You see, A have acquired B, B2 have also acquired C, but A and C business does not relate. There's no correlation. It doesn't relate at all. It's unrelated. Then we cannot add it. Then what do? The next idea is either we have to sell it because strategically it doesn't fit well. It doesn't fit into our strategic plans or business units. So you see that the idea of selling, because we can't use it. It means that avocado can never use Watery. Can't use Watery for anything. So that means the value of Watery can never be generated through use. IFRS 5 is calling you. That's all. IFRS 5 is doing what? It's calling you today. So I'm not done reading, no. We've gotten. And so the directors plan to sell this investment. Oh, you are? Well done. The investment is currently being marketed with a view to sell it within 4 months. So here, this is typical under IFRS 5. In exams, anyone that will mention that this should be accounted for under IFRS 5, we have a special mark for you. Because the examiner never mentioned any standard here, any IFRS here. Per your knowledge, per your research, or per your understanding, you've been able to figure out which type of standard that the examiner is testing you. So there should be a professional or extra mark for those who will say that. So how then do you answer this? You don't write plenty. Your first point. Your first point. So this is IFRS 5. Quote the condition for us. What are the conditions before one can record an investment? Under IFRS 5, what are the conditions? Don't forget the max is 2.5, so don't write plenty. Yes. Now, before Watri's investments can be classified as held for sale, 2 conditions have to be fulfilled. What's the first condition? If and not only if the carrying amount of Watri investments can only be recovered through sale, and you are done with the first condition. So here, quote the condition for us. So they said discuss. So before we have to record this in the financial statement as what? As non-current asset held for sale. First thing, the condition is that if and only if the current amount of Watri's investment or investment in Watri can be what? Recovered through what? Through sale rather than use. Condition number 2, if it is probable that the sale will be completed within 1 year. And here, what do? You tell the examiner. So after you quoting these 2 conditions, which of the conditions have they got it right? Have they got all the 2 conditions right in the question? Or they have gotten one right and they've got one wrong? All the 2 conditions must be there at the same time. Even if one is not there, forget it. So over here, with the aim of the first condition, which says that the value of the asset should only be recovered through what? Through sale, but not through use. And hence, since Watri's investment does not fall within the strategic plans of Avocado Limited, then it means that the value cannot be what? Be recovered. The current amount of Watri can never be recovered through use, because Avocado will not integrate Watri's business into their own. Full stop. Again, the investment has been marketed for and hope to sell within 4 months, and hence the sales can be completed within 1 financial year. Hence, Watri investment in Watri can be classified as what? Non-current asset held for sale under IFRS 5. Full stop. You are not that no. This is a discussion. So that is the point. So let me write something small. I'm only raising the point. You do the explanation in the exams for me. So let me raise the point for you, how you should handle this question. Don't forget that the max is 2.5. So write according to 2.5. So first thing you do, tell the examiner this is question number 1. Is it A or B or C? Question 1A. So question 1A. Investment in who? What three? Impacts. What three impacts? First in solution, quote the conditions. So we said that. So this will be accounted for under IFRS 5 if the following conditions are satisfied. Quote the two conditions for us. So the value recovered through sale but not used. Current amount, tell us, will only be recovered through what? Sale rather than use. The last one, probable that the sale will be completed within a year and 4 months qualified. So that's all. All right, so then tell us which of the conditions has been satisfied. So which one has been satisfied? So tell us which conditions, and all the conditions has been met as I've explained. So you tell us. Your next point, you tell us the treatment. Now that they satisfy the condition, tell us the treatment. Now that the condition has been satisfied, tell us the accounting treatment. So what is the treatment? The treatment is that first treatment. So accounting treatment. So the treatment. First, the condition. Accounting treatment. First, in the comprehensive income, consolidated comprehensive income of the group. Income of the group. Tell the examiner that only one line. So you show one line representing the profits from discontinued operation. So profit. So showing a single and separated line. Representing post-tax. That is post-tax profit from discontinued operation or disposal group. Which includes any impairment That's all. Then in this comprehensive income for the group, what about the financial position for the group? So in the statement, of financial position for the group, again, within the non-current asset, a single and separated line or amount representing the lower of cost and fair value less cost to sell of the investment. That is it. So basically, I'm done with the game. So telling us this will not let you move away from the actual, this 2.5, so don't talk plenty. So the entire investment should be treated as and measured at lower of what? Lower of cost, and then fair value less cost to sell, or the carrying amount. So either you can say cost or carrying amount. That's all. I'm done with the storyline. Now let me go to the next question. Okay, so I'm done with this particular question. Nothing else, nothing more. Now the next one is investment with Aketu Brothers. This one is not head for sale, so I'm done. So you see how they can put the question? It just confuse us small, but we are done. So here they didn't ask us to come and calculate though. So those that will do calculations, do it somewhere, cry, come and explain. No. So explain the figures, the numbers. Okay, I'm done. Let me move on to my next IFRS 5 question that I am solving. Please, if I have not gone to the tutorials, do so that you can capture everything for your stuff. Good. Don't forget, exactly 7 p.m. we are switching to Boston Consulting Group, everything about it, and then move on with the game. All right, so now let's continue with the storyline. My next question that I'll solve under the IFRS 5. I think that one we have solved it already, but let me just add it to the storyline to make it so interesting. We have solved it before, but I'm just adding to the storyline. It said that explain with justification. Do not just explain. Explain with justification whether each of the following could most likely be classified as discontinued operation under IFRS 5 in the financial statement? So there are 3 things here, 5 marks. So these are the conditions. If you see these stories, IFRS 5 is calling you. A reportable operating what? A reportable operating segment that met the definition of held for sale after the financial year, after the year end. This is IAS 10. So some of the final level students claiming that they grow beyond what? IFRS 10. It will never come in the exams. Like we have a very funny way of combining standard in final level. Every final level, one question will not be centered on one standard. Only in a few situations. Most often we like combining standards that are related and see how you can appreciate and argue your point in each of the standards we are presented. Many cannot find their way through. So take notice. Now, IAS 10, event after reporting period. They met the condition after the year end. Typically, we cannot classify it. So it does not meet, we didn't, in fact, meet the condition before the year end. After the year end, non-adjusting event. So typically, non-adjusting event. So here, it does not qualify. And you explain with justification. You justify that this is non-adjusting event and hence it does not call for what? So justify. The reason is that before the year end, the transaction does not meet the definition of what? Of IFRS 5, and hence we cannot classify. That's a justification. It met the condition after, not before. We are interested. Don't forget with adjusting events. Adjusting events are events which occur after the reporting period, but it provides evidence of its existence before the year end. Do you get it? So it provides evidence of what? Their existence before the year end. So take notice of that. So here we can't, and that's the reason. Third examiner, the reason being that they met the condition after the year, not before. So we are done. Question number 2, a reportable operating segment that was closed down during the financial year. The assets of the segment were broken up. You see, broken up. They didn't use it to, they transferred the use and used in another division. Thank God. If they should have used it in the same division, it will never qualify for IFRS 5. If you stop and use the same asset in the same business again, IFRS 5 will never hold. But as soon as you change the use it for another work, IFRS 5 will come in. So here, since you close down, it means that it has been sold, it has been discontinued. The word discontinued does not necessarily mean you sell, you stop. Simple means you are not using it again. You have paused, you have stopped, you have discontinued. Not temporary, but permanent. During the year, not after the year end. So it qualified. And the assets were used in another division or other divisions. So hence it qualified to be what? Discontinued operation. Don't forget that in operating segment, all the assets must come together as one. So as soon as you share it in another division, that's all. You have dismantled operating segment. So here, the condition, or it met the definition. Why? What's the reason? Close down means that division has been discontinued. It means that the value of it cannot be obtained through what? Through use. So that's why they've shut down. And now they have changed the use. So all of them, that is it. So let's go to the last condition. The last question. A division of a business classified as held for sale that was correctly treated as discontinued operation in the last year's financial statement, but which has not, last year financial statement, and this year, that means it has passed 1 year, which has not been sold by this year and due to sale being referred to as National Insurance Commission, which regulates insurance industry. The commission is not expected to report its finding until 6 months after the year end. So that means you take 1.5 years before they can sell this asset. Hence, what should be the way forward? You see, IFRS 5 stated clearly that anytime you classify asset as held for sale, after 1 year, it must be probable. After 1 year, if you have still not sold the asset, all what you have to do is that you have to reassess the reason. If the reason is as a result of management intention, then the asset must be reclassified. If the reason is not management fault, it goes beyond management control, like this question. Management have to obtain permission from National Insurance Commission, and the commission is not yet to give out their report. So they are not going to even until the next 6 months. So the reason here, or the reason for the delay, goes beyond management control. In that case, you are allowed to classify it for what? As held for sale. You will still be allowed to classify the asset as what? Held for sale. Reason being that it is not your fault. That's all. So here, and that is the reason we've shared. But if it is your fault, you have tried the thing wrongly, try. You can't classify it as held for sale again. You have to reclassify it. So probably we need a question for reclassification. So please try. The next time we'll get a question. It must be reclassification calculation. Take notice of that. Reclassification calculation. That's the next time we get IFRS 5 question. So I'm done with the storyline. So I'm done with this question. Let me move on to the next question, unless you have a question to ask us. All right, so let's go to the next question. More questions for us. The next question I look out for is a question of integrity with all materials. It's a calculation, 5 marks. Let me do it. So now, at least I've solved 2 questions that talks about the conditions. And I can go forward and do a calculation for you. What a wow. So I'm now going to look up for a calculation question. The year that it came, very interesting one. So let's go to this particular question and do justice to it. So this is Asawase Limited. So in respect of Asawase Limited, years end that 31st of December 2017, show and briefly explain, please. You see, many people don't read the instructions in exams, so they end up not getting the full mark. This question is telling you to show. Show means calculate. Tell us where it will go. And briefly explain. So there are 2 things you have to do for us. You show and you explain. the amount recognized as non-current asset under IFRS 5 as at 1st July 2017, and the impairment charge, if any. What a wow. Questions like this, some will explain, they will not show. Some will show, they will not explain. No problem. And some too will do the two, but not under IFRS what? 5. But under different assumption. That is why we went through the principle. So please get it clear for us. Let's start. So right after this, you start with the storyline. And then we go. So right after this, you start with the scenario. So here I will say calculation of impairment charge, if any. Then I'll now move on to the asset value. So at least let's write something. Right after the requirement, at least write something down. This one is question 2D. Question number 2D. So tell the examiner. Impairment or amount to be recognized, if any. Impairment charge, if any. First thing, you see, to charge impairment, all what you have to do is that you need the issue. This impairment is not under IAS 36, so we are begging. This impairment is under IFRS 5. You see, I can explain a lot of impairment that is not under IAS 36. You see, IFRS 9, there's an impairment there. It's not under IAS 36. IAS 2, there's an impairment there. IFRS 5, there's an impairment. IAS 41, there's an impairment. What a wow. All this impairment is not under IAS 36. What a wow. So I can impair, I can say impairment, not necessarily under IAS 36. Because IFRS 5 impairment is under IFRS 5. IAS 36 can never come here. So you have your barrier. Your barrier ends here. Good. So basically, that is what you have to look at for. So here we are still within the ambit of what? IFRS 5. Now let's go straight to the game. So I'm now going to read the storyline. At least right after the requirement, do something. Do something, write something down right after the requirement. Summarize something you know, something you see. Now let's go to the storyline. It said that Asawas Limited made a decision to sell a business unit on 15th of June 2017. Please, the mere fact you have made a decision does not mean you qualify. Take note of, if you have made a decision, it doesn't mean that you only qualify when the conditions has been satisfied. That is it. So as to when they make the decision, it's irrelevant to us. As to when the condition has been satisfied, that is where we will start our calculations from. So take notice. And then the criteria to classify the unit held for sale were met on on 1st July 2017. You see that? So please, the asset must be depreciated right from the beginning of the year up to when? July. Don't end it at 15th June, no. Because you made a condition at where? 1st of July, 2017. These are the small issues you have to look out for. Then why did they bring the 15th of June? Of course, you have to bring it because many people, their attention will be drifted on the 15th June and to waste time small. So by the time they realize that they have to go to 1st July 2017, at least 5 to 6 minutes could have been spent there to just analyzing the date. So by the time you can solve the work, they'll tell that stop work, time over. And you come and solve it at home for us. When you come home, you pick it and you can solve, but you cannot solve it under the examination time. So please follow this and you are okay. Now it says clearly that as a WAS's accounting year end 31st December, so it tells me clearly that the asset must be depreciated right from January 2017 up to when? 1st July. Don't forget, after you classify any asset as held for sale, we don't depreciate that asset. Depreciation is off. As a WASA Limited accounting year end, at 1st July 2017, the current amount of these assets and liabilities of the business before 2017 depreciation, I like this examiner, or revaluation adjustment was as follows. That means the asset has not been depreciated. Let me clap for him. The asset has not been depreciated, so you have to depreciate it. Those depreciable ones, depreciate it. Some of them have not also been revalued. Revalue them. So depreciate it before 2017. But here, don't depreciate it fully. You get it? Don't depreciate it fully. We are begging you. We are begging you. Don't depreciate it fully. Depreciate it from the time the year starts up to the exact point when they made a condition. That's 6 months, right? So 6 month depreciation. Land and building, 150 million. Equipment, 50. Trade receivable. Please, all this, we don't impair this. Don't waste your time, your energy on this. IFRS 5 does not account for this. So I don't expect you to start doing calculations on these 3 items. I'm begging you, don't. That is why when we started IFRS 5, I took my time to walk you through the scope. At the final level, we are going to use the scope indirectly. We will never tell that this is an IFRS 5, but we will add all together as a package. So take note. IFRS 5 does not deal with this item I've highlighted here. So as it is, just carry these figures. Anything they said about it, give a dead ear to it. Any story they have informed you about these 3 items, give it a dead ear. Do as if it's not part of the story. So only 2 items per you. That's why the max is 5, even though the story is very long. So we need to find the current amount of this. You see, for IFRS 5, first you need to find current amount. And then the current amount, we must depreciate the assets, the depreciable ones. So that is it. They say additional information. Let's go. So here, to solve it, write here current amount of the asset. So write here current amount. Write the reporting currency here in millions. Write the names of the assets one after the other. First asset on the list, land and building. Equipment. Just the names of the asset, please. Land and building, equipment, they say something again. Trade receivable 30, inventory 20. You can write their names and their figures. So trade receivable, you see, $30, $20, $26. What a wow. And then trade payable. So basically, let me show you the secret. So this question that the examiner set it very, very plenty. It left with only 2 stories. When I added this to this, add them. So in exams, if you can't do anything, this one will mark it wrong for you. This one, 1, 2, 3. It's not good. The thing that I don't understand, you have scored 3 things already. And let me just these 2 figures. You are now on the question. Have you seen how interesting it is? If you know the scope, where IFRS 5 starts and where it ends, solving their question becomes very interesting. All right. Good. I have a very nice question for you after this. Yes. It came in November 2017. Question number 2. Yes, November 2017. Financial reporting. Let's go. So I'm going to start with the storyline slowly so that you can get it. Additional information. Let's go. It says that land and building are held under revaluation model, IAS 16. Okay. Okay, so that means we need a revalued amount as at 2017 July. That's all. That is all what you need. We need the revalued amount as at the date they are doing the classification for held for sale. And were last revalued on 31st December 2016 to 120. You are not interested in this figure. I'm not interested in this. 31st December, it's very long. I need a value as at what? 1st of what? July 2017. Their market value on 1st July 2017. Oh, you what? That's what I want to. 124. So the values they've stated here as 120 must go off, replaced by what? 124. The rest of the story, don't even read it. That's all you are done. But let me go for tuition purposes. Just for tuition purposes, let me read it for you. And the selling costs were estimated to be 2.5 million. Please, let me explain this. At that date, residual value was and continue to be expected to be higher than the cost. No problem with that. You see, this is a disposal group. Disposal group, we saw them at a goal, like cash generating units. They are a group of assets that we sell them together. So we should not be interested in calculation of their individual fair value less cost to sell, unless the examiner did not give us their fair value less cost to sell for the entire group. All what I'm trying to say is that when you have a group of assets, like this question, they are a group of assets forming just one disposal group. That one, we don't pick the fair value, let's go to sell individually, but instead, the examiner should give us the group fair value, let's go to sell. Because in IFRS 5, we must compare what? Two things and select the lower. We must compare carrying amount. I hope you remember carrying amount versus fair value less cost to sell. That is IFRS what? 5. But this is what? It's a disposal group, not a single asset. Don't forget that it is not one asset that we are selling here. We are selling group of assets. So we have to pick the total group carrying amount and the total group fair value less cost to sell. So do not use the individual ones unless the examiner have not given us the total. So this, recognize all this. What an interesting question. It has a lot of issue, but what you need to solve it is small. We normally do that to waste extra time. In exams, many people will start, oh, fair value is 124. Less cost to sell 2.25. They'll get an answer, they write it down. Okay. So take notice, we are not interested in the fair value less cost to sell in the individual asset unless we don't have the total. And it's not right to do that. Yes. So here we pick only the 124. So let me go to the solution. The land and building will just be stated at 124. Nothing else, nothing more. The rest of the story, don't read it. Right here, 124. What 11 just one figure. We are done with this question. What a wow. What a wow. And this is a question that someone wrote. I don't know, the issue that it brought was a lot, but the solution is very minimal. Let's go. Let's go to note 2. Oh, why are you going plenty like that? Take your time, man. Small movement I did and I'm going plenty. Why? Note 2. The equipment is held under cost model. Under revaluation model, it means that we have to use a fair value. Under cost model, it means we have to depreciate it and carry it at depreciated cost. So it means that we have to find the cost less the accumulated depreciation in order to get a carrying amount. So here depreciation must be calculated. What a wow. So calculate the depreciation, subtract it from the cost of the asset and get a carrying amount. So let's take we are going to calculate depreciation. That's IAS 16, you see? So then IAS 16 is inside. You thought you are doing IFRS 5. You are very happy, confident about IFRS 5. You go, we are adding IAS 16 to it for you. Please, there's no way we can set some of the standard. No way the examiner can set a question without involving another standard, like IAS 36, IFRS 5. No way examiner can set any this question without involving IAS 16 and IAS 38. That's a combination. So there's no IFRS 5 question on this earth without IAS 16, without IAS 38. Take notice of that. What a combination. So if you're aware of all these combinations, all the drama of the examiner, you will catch it. You will see the in and out of it. So there will not be an issue for you at all. And that is all. So when you join us in our main sections, that is what we are going to deliberate more on this. You can't afford to miss any of the main sections class. Let's continue the storyline. Now, You see, he said the equipment was purchased on 1st of July 2015. This exam now. For 80 million. And it's been depreciated on straight line over a 4-year period. So 1 year depreciation will be what? 80 million divided by what? By 4 years. So 80 divided by 4. That will be 1 year depreciation. Count the number of years. Please, let us start counting. From July 2015 up to July 2017. How many years? Can tell us how many years? From July 2015 up to July 2017. How many years? How many years? July, 2 years, solid one. That's it. So from July 2015 up to July 2016 is 1 year. From July 2016 up to July 2017 is another 1 year, making 2 years. So that this asset, the accumulated depreciation is 2 years. That's all. So you open a bracket and do the computation. Or we just have to charge just just 6 months depreciation and you are free to go. Check. I'm missing this 50 here. There are so many ways of getting the answer correct. You can just find 6 months depreciation from this figure. That's all. You are right. Just find 6 months. I'm going to show you 4 different ways of working to get the answer correct. And you must get one of these right. That's all. Just understand one. Let's do what the fastest person could do, or the shortcut method. So just find 6 months because they have not depreciated this asset from just in 2017 depreciation. That's it. Yes, it. So only 2017 depreciation and only for 6 months. And you know why it's for 6 months? It's up to July. 1st July. So July is not part. So January to June. So if the cost of the asset is 80,000 and they are going to use it for 4 years, 1 year depreciation will be how much? 80 over what? Over 4. No problem. 6 months will be what? Half of it. Take it from 50. You are done with the storyline. So open a bracket. Tell the examiner 50 minus 80 over 4 times 6 over 12. That's all. And what will be the answer? So 80 over 4 gives us 20. Half of 20 is what? 10. So therefore, this figure should be 40. Powerful one. How do you get it? You are done. Another method. Method number 2. Let me do this small for you. Method number 2. Method 2. The asset life is 4 years. 4 years. The cost of the asset. Cost of the asset is 80 less total accumulated depreciation. That would be 80 over 4 years times 2. That will give us 40. Take it off. What do you get? You get 40. So therefore, the current amount should be 40. What a wow. Let's do another method again. Another shortcut. Cost of the asset is 80. Tell me the expired years. Total number of years is 4 years. Tell me the expired years. Expired years is 2 years because they've used for 2 years. How many years remain? Another 2 years. So that one, pick the 2 years remain. Please, these 2 years. If the 2 years remain, now divide it by the entire useful life. That will be 4. Multiply by 80, you get 40. This condition will only work if there's no scrap value. Take notice, so if there's a scrap value, it will never work. How many so far? We have 3 methods, 3 different approach. 3 different approach. What a wow. What a wow. So the answer is 40. Wherever you pass, you must get 40 for us. You can do any magic to get 40. We don't have a problem. So long as you can show working. So now we are done. Sum up all. So let's sum up. 124 plus 40. But because we are in class, I have to read the rest of the story. So for the purpose of the exams, the rest of the story is irrelevant. We are only interested in the fair value. Let's go to solve. Anything they tell you is not all that important. Now let's go. Note 3. The trade receivables are recorded at invoice value. Good news. Reduced by any allowance for credit losses recognized at the date of December 2016. No adjustment to this allowance was necessary after July 2017. So do you need to do adjustment? So we are not interested. No adjustment. If there was any adjustment, we could have done it. We could have done adjustment necessary. Yes. Take notice. So the receivables, if factored, will realize approximately 26 net of transaction cost. This fair value, let's go to store. Ignore. Fair value, let's go to store. We are not interested. We are only interested in fair value, let's go to store individually when the group 1 is not available. Take notice. When the group is not available. So if I go through all this question, I don't see the group. I will come back and calculate all the individual ones and add them up. But once they give me the group 1, forget about the individual. Because they will not sell the asset individual, they will sell the asset group together. Let's go to note 4. The inventories are mechanized, purchased for resale and held at cost. No problem. Their market value is 28. Associated cost would amount to 1.4 million. We are not interested. Forget it. It was anticipated at July 2017 that business will be sold for 200 million. Powerful. That is what I need. If this figure is not here, then I will have to go back, recalculate all the individual fair value. Let's go to sell individually. So why is that you don't give this figure at first? You hide it at the last point. Yes, we are aware that by the time you do, in fact, real typical exams, many people will start calculating it individually. So by the time they get to this side, they could have done it. And when they finish, they have to cancel what they've done. So 200 net of selling cost to a rival company in a single transaction. What a wow. You see, this is a group of assets. We are selling them as one, not individual, not like we are selling them components one by one. It's a waste of time. So this is 200. So go and put it there. Fair value cost is 200. Please sum them up for me. This is the total carrying amount. Total carrying amount. What do you get? Go to the next page. Tell the examiner, Mr. Examiner, you have given me the fair value less cost to sell for the entire unit. 124 plus 40, 164. Plus all of this. What do you get? $188. I'll take that. 188. So 188. Now go to the next line. What's the fair value cost to sell? They say it's 200. It is what? 200. So what will be the value of this unit? So the value will it be 188 or 200? What's the condition? What's the rule? Compare the current amount to the fair value. Let's go to say instead of the lower. So between 200 and 188, which one is lower? 200 and 188, which one is lower? 200 and 188. Of course, 188 is what? Lower. So therefore, the value will be what? So the value should be 188. So therefore, the value of the disposal group should be what? 188. If you do this, you are not done with this. You are not done. Any impairment? Any impairment? There are no impairment because the current amount, there are no impairment. That examiner, no impairment. And then the gain of the difference should be disclosed. Here, no impairment because the fair value cost to sell is not lower. You only have impairment if the fair value cost to sell is lower. Take notice, impairment only exists if fair value cost to sell is lower. Then they say we should now comment on the value. You see, there's something I want you to highlight when you are solving it alone. They say explain the amount recognized as non-current asset held for sale under what? IFRS 5. So here, tell me, not all the assets will qualify. Not all the assets will qualify. So here, the asset that will qualify will be what? Only these two assets. So sum them up, that's all. So therefore, the amount that should be recognized as non-current asset held for sale will be, so that's the next line. So tell us the amount that should be recognized as what? Non-current asset held for sale. Only the two. Just copy these two. Land and building, 124 million. Land and building, 124. Equipment, 40. That's all. Equipment, 40. You are done. 5 marks. The rest is explanation. You explain. You explain why there's no impairment. And then the rest is storyline. I'm done with this question. Let's move on to the next question. I'm solving last 2 questions. Next 2 questions, and then we are done with IFRS 5 questions solved. Next 2 questions, and then we are done. Now, my next question will be a bit advanced than this. I think this question came, no, the next question rather. It came somewhere, the COVID time. It's 2020, 2021 November, somewhere. Good, that was the year they brought the second coming of Sweet potato, and it also, yeah, November 2021. That one was also like that. So let me pick the next question. You have any question as we are solving, then you are telling us the issues in it, and then we move on with the game. So let me go to my next question. My next question. Okay. This question will be for your evening relaxation. This one, you see, this question is for your evening relaxation. It's for your evening relaxation. It's 4 marks. Say identify 2 conditions which must be present in order to present the results of an operation as discontinued, and the accounting treatment that applies when such classification is deemed appropriate. What are the conditions? So write the 2 conditions. This is final level exams. Final level examination. So write down the conditions for us. So how do you respond to questions of this nature? I am interested in this. Come out with the conditions. The same year they asked them earnings per share. What a wow. What a wow. So that is it. All right, so conditions for recording an operation as what? Held for sale. So condition. Good. So yeah, if you could remember, there was a day we wrote some point down. That was the answer the examiner wants from you. We wrote something down. That was the answer the examiner wants. There was some time. What is a discontinued operation? Is a component of an entity that does mean disposed of or is classified as held for sale. That's the first condition. It must meet the definition. See, before you can record anything as PP, it must meet the definition. Oh. That's the first. That we call it inherent condition. So anytime the examiner asks you that, oh, can they record asset? Trick the examiner. In fact, you are not tricking the examiner. Just tell the examiner that you see, examiner. Before they can record this one as an asset, it must meet the definition. That's a fact. That condition is automatic. It's everywhere. But we don't normally ask it. We don't normally ask it to the condition. So before you can record anything, like let's say provision, it must meet the definition of provision. Before you can record something as what? Intangible asset, it must meet the definition of what? Intangible asset. Before you can record anything as what? As financial instrument, it must meet the definition. Before you can record anything as what? Investment property, it must meet the definition. That one is inherent. So take notice. So you can tell the examiner. This one, we did that. We wrote the condition. Let me revisit the condition here for you. So in fact, let me just recite it for you to see, for you to write it down. If I start writing, it will take time. You know me, and then my slow writing. Number 1, first condition, third examiner. It must meet the definition of what? Discontinued operation. What's the definition? The definition is that discontinued operation is nothing but what? It's a component of an entity, that are either disposed or classified as held for sale or even discontinued. That is it. Now, it represents a separate major line of business. It represents what? A separate major line of business or geographical area of location. That is the condition. Or is a part of what? A single coordinated plan to dispose a major line of business. Or is a subsidiary acquired exclusively for resale. That's all. All these are the conditions. So take notice, so before you can record an operation as discontinued operation, the first condition is that it must be a component. And that component, either we have sold it, we have sold. During the year, we have sold it. Or we have classified it as held for sale. And it represents a major line of business or geographical area of what? Operation. Or it's a subsidiary. That's what, any 2 points. Then accounting treatment. I think I've written it. Accounting treatment. I think, let me go to the, I've written it today. So you just have to copy the same storyline. I've written it today. The accounting treatment, I've written it. Just copy the same storyline. And the first question we solve. I wrote the accounting treatment. That is it. So in the comprehensive income, a single separated amount, representing the post-tax profits. That's all. Single separated what? Amount or figure representing post-tax profits for discontinued operation must be shown in the disposal group, which include what? Any impairments. Good. Then on the balance sheet, yes, you carry that what? Lower of carrying amount and then fair value. Let's go to, so I'm done with this question. 4 marks, the condition. Now let me go to my next question that I'll solve. Good. Back on. My next question is the question that they brought in the other section. Let me the last 2 questions, then I'll close the chapter. Last 2 questions, then we close the chapter. Last 2 questions, then we close the chapter. Let's go. Back on. I like this question. Yes. I like this question. You see, after you are seeing what I'm also seeing, you see, all these things don't qualify you. All these don't qualify you. Then what is, which one does it qualify? The first 2, all this does not qualify you. How we get it? But we need them. We don't account for them under IFRS, but we need them because we can't take them out from the group. You know, it is a group, so you can't take them out. But after bringing them, it ends there. Please, how we get it? You see how we solve the question. So you must know the scope. The final level, please and please again, know the scope of every standard. At least the first 10 standards that we have gone through, know their scope, where they end, where they start from. Thank you. Now let me solve this question fully, then we run away. This is November 2021. Full 9 marks. Wow, the marks is heavy. It means that it will have heavy issues. Recommend. This one is recommendation. To the directors of Berco or Berco Limited. That's how I call it, Berco Limited. How the above transaction should be accounted for in the consolidated financial statement as at 31st December 2020, including statements, including financial statement extracts in accordance with the relevant financial reporting standard. Relevant. So you see, relevant. You see, all IFRS 5 questions can never be set without what? IAS 16 and IAS 38. No matter what, they will pass through the junction. No matter what, you pass through the junction. It's like you want to practice audit without a professional qualification. Like unless you turn yourself to be a robot, no problem. I will not allow any robot to join our professional body. We are begging you, don't need robots inside our game. Yes, as it stands now, the first robot lawyer is facing prosecution in the United States. Reason being that he's practicing law without a certificate. We don't want that in accounting profession. We beg them, no AI in accounting. When it comes, it must back by our certificate. Yes, the AI must come and sit and write the exams and see if he can be able to answer within that. Yes, he will. And then we'll move on with the game. So please take notice of that. So right after the requirement, set the tone. This is how we have to answer the question on the examination condition. Right after the requirements, don't read the storyline. Please, I've not read the entire story, but immediately after the requirement, I have to write something that shows that I'm working. Don't go and read the full story. They will confuse you. You don't even know where to start from. Please. To start with every question is the requirement. Forget about the story. So recommend to the directors how the above transaction should be treated. And you must include financial statements. Okay. So I'll say financial statement extract. What to go to P&L, what to go to balance sheet. That's all. When they say financial statement extract, what to go to P&L, what to go to balance sheet. That's all. Nothing else, nothing more. So in that case, I'll now come to your third examiner. This is question number 2. Don't know whether it was A. I don't know whether it was A or D. This question 2B. Question 2B. You see, I've not read the entire story. I don't need to read the entire story before doing this thing. So those that start the question and say target, I don't know where to start from. I don't even know where to start from. There was a requirement to it, Abby. There was a requirement. So start from the requirement. Don't read the scenario. The scenario will confuse you. If you're going to read the scenario, you don't know where to start from. We are aware that you read from the scenario. So the confusion starts from there. If you want to answer every question clear, please start from the requirement so that you don't jump anything. The mere fact you see story like it does not mean it's IFRS 5. It can be impairment, it can be something else. It's the requirement that will tell you what to do. So your third examiner, financial statement. So right here, Berco Limited or Berco Group. Was it a group of company? Berco Limited. So Berco Limited. So what? Comprehensive income, right? So consolidated statement of comprehensive income. When you do this for the exam, you say, wow, you want to solve the question. For the year ended, you continue. Reporting currency is in million. Leave it like this. Don't do anything again. Go to the next page, right there, back again. Limited. Right here, consolidated. Statement of financial position. As at what? Right, the reporting currency. At least, this is what? Then explanation continue. At least, explanation. At least, they said, then your workings. You see, you doing this for the examiner. They say, oh, you started, oh, okay. Wow, you've done well. So you wrote question 2. B, this one is yours. The name of the company. The requirement is yours. The reporting currency, another tick. This is yours. This is yours. This is yours. The rest will not mark it again. If you leave it, 6 ticks free of charge. Does not mean 6 marks, so please. It can maybe be 1 mark. Everything done. But it's okay. It's a good startup. You've not done anything. So this is how we answer exams question. If you have no idea, do this and run away. You will never walk alone. At other sections, I walk you through how to answer IFRS's question, even in an event where you have no understanding. We are only hunting for marks so that we can earn our pass mark in exams. But don't do that in practice. If you don't understand, tell the client, I don't understand. Tell the boss, I don't understand IFRS. Don't hunt for marks. Other than that, you may cause a disaster for your company. But for the exams, you only want few marks to pass and leave the examination pressure. Do you get that? Good. So take notes. So this is a very big disclaimer. Now, let's go. So I'm now going to start a storyline. So in IFRS 5, what I need is the carrying amount. So I'm going to look for the carrying amount and then cost to sell. That's all. So at least Beku Limited acquired all equity shares of Jamila Limited on 1st January 2018 for a consideration of 1,250, please. In exams, final level. If you see that some companies acquire another company, immediately, company is acquiring another company. Immediately, goodwill must come to mind. Consideration pay is 1,250. What's the net asset acquired? This is the net asset acquired. 1,272. What a wow. So immediately there must be goodwill. So I'm going to show my workings. I don't want to finish because by the time I finish reading the entire story, I may forget about it, right? This is the net asset, book value of the net asset, no problem. But they say the carrying amount and the fair value of identifiable net asset at acquisition was 1,230. What will the goodwill? Goodwill. You paid 1,250, but the net asset is what? 1,230. So you have paid much more than the net asset by 20. So the 20 becomes the goodwill. Immediately, don't rest. Go and calculate the goodwill. Please, you are solving the question line by line. Don't finish the entire storyline before you say I will do it. If the examiner who said the question cannot and will not answer the question block, he never answered the question block. He never set the question block, not by magic. He typed everything at a go. It was a line by line. In fact, words by words he typed. So the same way, if you're also solving it, solve it line by line. Where you understand, do it. Where you don't understand, move on. It's not everything you must understand examination hall, please. It's not everything. No. That's why the pass mark is not 100, but it's what? 50, 51. If the pass mark is 100, then it means that you must understand everything. That's not the storyline. So why are you worrying yourself? Oh yeah, let's go and do it. And the work is first work is good role. So my good role, I'll just say purchase consideration 12,250 million. I'll say less net asset, current amount of net asset. Less current amount of net assets, 1,230. 20. Good role. You see, you are not done with the question. Please do this. Even in the near future, if the examiner wants to adjust this figure, come and adjust it. What if there's no adjustment? You've got it right. Many students have a perception that let me wait. When I'm done reading the entire story, please never do that. As and when you are going, be solving. Any of the first figures you have written that require adjustment, go and adjust it. Is it by force? Just go and adjust it. Don't say that I'm reading the entire words when I finish. You are not a computer. You are not an IA. You are not artificial intelligence. You are not a robot that can store everything inside the head. Some will go off. So as when you read, you apply. You apply. If you finish reading or you apply something small, leave it and go and solve the next one. Is it by force to complete it? Is it by force? Not by force. And if you do this, you pass without even adding up any BP, any stress. Because you did what, like line by line, line by line, line by line. You are done. I'm not done reading the entire question, no, but we have started solving. That is how you have to do an examination hall. Forget about, I'll get something wrong. Definitely, you get something wrong. Definitely, you get more correct. That's all. Now let's continue with the reading. So I'm down with good rule. On 31st of December 2020, Beko Limited was in the process of selling its entire shareholding. In Jamila, anytime somebody is selling something, IFRS 5 is calling you. Take note. And so it was decided that Jamila Limited should be treated as a disposal group. Thank you, it's correct. You are right. Held for sale in accordance with what? IFRS 5. Discontinued operation. At that date, the current amount of Jamila Limited's net asset before classification as held for sale at 31st December 2020 in the individual state or financial position as follows. Don't forget to add a good word to it. Don't forget to add the good word to it when you're doing a computation. Don't forget to add a good word to it. When I'm done, I'll show something in the same year what they did. Don't forget to add your good word to it. So list all the assets. So let's go and list all the assets. And then we move on with the game. So don't forget to list all the assets and start with their carrying amounts. So you list all the assets, including goodwill. So the current amount figure will definitely change. Yeah, so when you're listing the assets, current amount figure will do what? Will definitely change. So these are the current amount. But you see, you start from goodwill. Some of these figures may be adjusted. They have not depreciated it. They have not impaired it. They have not done a whole lot of story like the way we did first. So the group has a policy of revaluing its property, plant, and equipment in accordance with what? IAS 16. No problem. There have been no revaluation or any other gains or loss included within Jamila's different components of equity since the date of acquisition, as the carrying amount was deemed to be a close enough approximation to its fair value. However, on 31st December 2020, with a carrying amount of 330 million was considered to have a fair value of what? 340 million. What does it mean? Asset with a carrying amount of 330 had a fair value of 340. So that should be a revaluation gain of what? What's the figure? Revaluation gain of 10. Automatically recognize this. So add 10 to the PPE. So the current amount of PPE, you must add 10. So call it revaluation gain. So from 330 minus what? 340. So go to the solution box. And I'll tell the examiner. This workings. Workings number 2. Impairment, if any. First, we need carrying amount. First, we need carrying amount. Now, the carrying amount that we need must first start from goodwill. Goodwill is 20 from workings number 1. 20 million. Next, we need PPE, property, plant, and equipment. From the question, what's the figure? You add 10 to it. Property, plant, and equipment. Property, plant, 836 plus 10. 846. That's it. So you write here. You open a bracket, third examiner, 836 plus into bracket 340 minus 330. And that gives us 846. Continue the storyline. You see, let me show you something. All these figures, don't worry yourself, just copy them and paste them. These 3 figures, they will never change. What a wow. So you see, when we solve the first question, we copy some figures free of charge. Here to the same thing. You see, if the examiners are going to give us a group of assets, there will always be easy marks inside. No story will be against them. The total fair value, let's go to sell, of the disposal group as of 31st December 20. As of 31st December was estimated to go 1220 million. There have not been previous goodwill on impairment of Jamila. Wow, look at this. Very interesting. That's all. Copy everything here again to the examiner. So we start current assets 584. That means intangible assets will never be affected. So just copy the intangible asset figure 4288. So in fact, even when what I said, I have to even revise it. You are copying everything. So this exam, if you should have copied everything, you only get this guy wrong. The rest will be correct for you. So you see that you can't solve the question. This question came. Some people do not write anything there because they don't understand. Meanwhile, they didn't see figures inside though. Why can't you recopy back the figures in a very nice manner for us? As if you are solving the question, but you are not solving the question. Something like this, reproduce everything back to us. If you go, there's a question like this, is that you don't understand anything, just recopy everything. Bold right on top, carrying amount. That's so don't add it, don't total it, please. I'm begging, don't total it. If you total it, the examiner will deem that you have recopied the question. That's all. Copy back this thing for us. We'll give you how many ticks. 1, 2, 3, 4. 4 ticks free of charge. The thing we don't understand. So you see how interesting examination question could be. So solving an exam question does not require for you to know everything. It can't be possible. Please, it can never be possible that one person know everything. But not able to. You two are not IA. Then let's call you IA. No. When you go, what is there? Do what you can. Do as if you are solving, you're not solving. That's all. So I'm done. Let's copy. Intangible asset, excluding goodwill. Good. They have done all. If they should have said including goodwill, it would be a disaster. So intangible asset 48. Let me go and put them in. Intangible asset 48. Intangible asset 428. When I'm done, I'll come to level 2, financial reporting. Them two, they have some questions. And current asset 584. 584. 584. Current asset. Non-current liabilities. Oh, have I changed something? Okay, so the current asset is 584. Non-current liabilities is what? 322 and 254. 322, 322, 254. 322, 254. They start doing the computation for me. This one becomes what? Non-current liabilities. Start doing the computation for me. These are current liabilities. Our time is up. We have to start the case study models. Current liabilities. Okay, so please, what do you get? What do you get? Putting all these two figures together. Everything to know. Special question solving on IFRS is all what you need to know. All right. 1302 million. Go to the next page. Third examiner, total carrying amount. You see, it's the same pattern. Any year that they are going to bring IFRS 5, be very happy. That thank God, total carrying amount. So the next line, third examiner, fair value, total fair value. Let's go to solve. Third examiner, total fair value less cost to sell. What's the figure? Cost to sell. From the question, let's go and pick it up. I'm almost done with this. The rest I will not calculate again. Total fair value less cost to sell. Where are you sure yourself? 1,220. 1,220. So 1,220. Is there any impairment loss? Which one is lower? Compare for me. Select. Is there any impairment? Which one is lower? Compare for me. Which one is lower? Compare for me. Any impairment? Yes. So long as the fair value less cost to sell, there's an impairment. Take notice. So if the fair value less cost to sell is not lower, don't bother yourself. There's no impairment. There is impairment to the impairment of, find the difference for me. What do you get? Find the difference for me. There is impairment to $102. I'll take that. So 102, that's the impairment. Now, he left the asset carrying amount. That's the last thing we'll do. So automatically, this one goes to P&L. So let's go to the carrying amount of the asset. Asset value. It says 82. Difference between 1302. Is it 1302? 1302, yes. 1302 minus, again, minus 1220. Answer. It's 82, right? Will be 82. Okay, so majority carries the vote. All right, so that's 82. Kindly confirm if you have a different answer for us. 1302 minus 1220. Of course, it's 82. Powerful. Then you now tell us the carried amount of assets. So after this impairment, you see, there's one thing. The assets are many, plenty assets. Group of assets. So we have to share the impairment. That's the only difference between what we are solving and the previous question. The previous question, no impairment exists. In the previous question, no impairment exists. No impairment. So there's no need for us to worry ourselves to share impairment. By this one, impairment exists, so you must share. The asset is not just one, so we cannot just look at one asset. We have to share the impairment. And write the asset here. So start like this: assets, the carrying amount, impairment, carrying amount afterwards, after impairment. That's all. Ghana cedis in millions. First asset must be goodwill. So reproduce the asset here. Goodwill was 20. Yes, you are copying this one. 28,46428. 28,466. So 28,466. That's PP. Wow. There's a likelihood that so 846. The next one is intangible assets. That's 428. The next one is, what's the next one? Current assets 584, 584, 584. Current assets 584. That is that now. The next one is 322254. Non-current and current. 322,254 non-current liabilities, and this is current liabilities. We add all, we had an answer. Here we add all, we are getting 1302. What's the total impairment? Impairment is 82. We take it off, we get an amount of. So let's share. Please, the impairment must be shared on the following basis. Sharing of impairment among disposal group. Sharing or allocating of impairment charge among disposal groups. They are in order. Number one, worthless asset, obviously impaired, valueless. Asset that is being damaged beyond recognition. Number two, goodwill. Number three, intangible asset without active market. This is one is come from IAS 36. Prescribe how we should share the impairment. Intangible assets without active market. Number four, any assets where the NRV is lower than the current amount here. All this must be part and part of it. How do we share impairment loss? How do we share impairment? Take notice. There are 5 steps. Number 5, the rest or the remaining impairment must be shared on pro rata basis using the current amount as a basis. So let's go and share this impairment. So that's the condition. Number 1, is there any obviously impaired asset in this question? No, we don't have. There's nowhere in the footnote they told us that one of the PP is damaged beyond recognition, valueless, worthless, obviously impaired. We don't have some. So we take it off from our list. Now, the next one is goodwill. Goodwill is 20. It must go off. Please do not impair this asset. Do not. All these assets we don't impair. IAS 36 also exempts this asset from impairment. What a wow. So just put dash here. Any figure you put here, you mark it down. Any figure, even if you put 1, 2, 3, you mark it down. Any figure you put there is wrong. We don't impair assets, non-current assets, current liabilities, and what? Current assets under IAS 36 or IFRS 5. Forget it. We don't do that. So this side, we can even record. So now let's be what? 2 assets. The rest of the impairment must be shared on pro rata basis. So for how many assets left? Left with only these 2 assets, PPE and what? And the intangible assets. So how much is the asset left? How much is the impairment left? Out of the 82, we have shared 20 already, so left is 60. So share the 60 using this basis. That's all. So let's go and share. Let me go and share. So therefore, PPE will get what? Add the 2 assets that is left for me. 846 plus 428. What's the answer? So that'll be 846 plus 428. That gives us 1,274. Good. So at the end of the day, let's share. We are sharing 60 among. So people will take 846 all divided by 1,274 times the 60. You put the answer down. You can do shortcut. The intangible assets will be equal to the 60 minus the answer you get over here. What's the answer? Let's say 40. Nearest whole number. So here is equal to what? So here minus 40. So you get what? 20. Or you can also say 428 divided by 1,274 times 60. Approximately you get 20, the same thing. So 40, 20. What a wow. So right here, 40, 20, and then subtract. Find the current amount after impairment. Find the current amount after impairment. So it's equal to the current amount before. This one is before. So 20 minus 20 dash is gone. 846 minus 40, so you get 806. 428 minus 20, you get 408. Wow, what a coincidence. 00 inside. Here you record them as it is. 84 322 254. This was the current amount. You add everything here. Obviously, you get 1220. If you don't get 1220, there's an error somewhere, there's a mistake somewhere. We have to rectify. And then we are done with the game. All right, so here comes the end of the question. This one goes to P&L. So the P&L that we wrote, you see the P&L, comprehensive income, only one thing is coming here. Third examiner, impairment loss. That's the only thing that will come here. So you see, that would be 82. So you see, the total impairment come here. So you are thinking that you don't know what to go to P&L. Only one thing is coming there. Forget about it. Focus on the work and the ticks. The balance sheet, the current amount of the disposal group, that's the only thing that will come there. So write a disposal group among your non-current assets. Non-current assets. Disposal group. Workings number what? Maybe 2. It is a 1220. That's all, you're done. So you are thinking, you are panicking. I don't know what to go to P and I don't know what to go to balance sheet. Only one item going there. The chunk of the work. Explanation, you now write stories for us. Good must be carried. You tell us current assets, comma, non-current liabilities, and what? Current liabilities are what? Outside the scope. They are outside the scope of IFRS 5 and what? IAS 36 impairments. That's all. Explanation. Goodwill must be valued. The rest of the story. I'm done with this question. So let me solve. I'm scanning to the last question for the day and we call it done. If you have a question, you ask. So this is how you have to answer our questions for us. This is not like Russian and Ukraine war. You take your time and then you go on gradual basis. So take notice of that. So this is the IAS what or IFRS 5. Now the last question, then I think I will end the section, this particular section. Yes. My next question, where do I pick it from? CCC, okay. Let me pick it from here. My next question should be here. My next question should be here. My next question. Let me select one of the questions that's so interesting. Okay, so let me see. You can take screenshot of this question and solve. Or let me move on. This one. No, let me move on. Need to link. Let me move on. Okay, this question will also be bad though. Are you PLC? Okay, so this one, I'm only scanning through. I'm not solving. Are you PLC? So this is in line with IFRS 5 non-current assets held for sale and discontinued operation. Recommend how the above be accounted for within the financial statement of IU for the year ended 31st July 2020. You see, 31st July 2022, no problem. Take the date. There is it. So here you just have to depreciate the assets and then you move on with the game. So it is IUPLC decided to dispose of one of its major production plants. So this one is not a disposal group, please take notice. They are only selling one asset, just one asset. It does not qualify to be a disposal group. Take notice. Which had become surplus to the requirement. At 31st January 2021, all criteria were met. All the criteria were met for the plant to be classified as held for sale. On 31st July 2022, there was a material evidence that the original sale plan would change, and hence it was considered not appropriate to retain the plant as held for sale. The plant is carried under cost model. Okay, so they changed the plan. Thank you. Have you seen what I was telling you, that the next question they have to set for us is when they change, when they say change in the plan. I have decided that I am going to classify the asset as held for sale. Me, I've changed my mind. I won't go again. How do I do it? We call it reclassification. You have to reclassify the asset back to use because I've changed my mind. So in that case, you carry the asset for us nicely. 5 marks. I'm done. Let me go to I think I have another question for you. This one, just try it for me. I'll share it on the page for you. So try your hands on them when I share it. And then if on our digital platform is also there, if on our digital platform, you can get this question there with it marking scheme, all of them, all the questions we solved today, the marking scheme are also attached. My attached solutions are also there. All of them are on the digital platform. As soon as we get your email address, we'll fix it there. You have access. If you don't have access to it, just draw my attention. I will just, all what we need is your email address, and that's all. We'll just add you to the list, and then we move on with the game. All right, so my last question for the night, and then we call it off. for now. The rest of the question, we have to look at them when we meet again another time. My next question have to deal with let me come here. The next set of questions I'll pick from FR, financial reporting. Financial reporting questions. All these questions I solve are final level questions. Let me also pick some of FR questions so that the FR people who will be using this material or this video will also appreciate IFRS 5. Not necessary that it's only in the final level. Good. FR1 is not difficult, so that one we are only going to discuss everything. It's only called for it, but trust me, you can get an IFRS question, FR, financial reporting, which is a bit complex than the corporate reporting one. There are so many. There are so many. I can show you one. The same November 2017, there's a question called, is that Adjust School? Yes, there's a question called Adjust School, Orlando. Okay, that question will pop up. Yeah, it's part. You will see it here. So my first question is on the screen. Let's discuss it. I'm only discussing it because if I say you have gotten the write-up, so discuss how this will be accounted for in a financial statement of Suffolk Line Limited for the year ended 31st December 2015 in accordance with IFRS 5 non-current assets for sale. Let's read the storyline. Suffolk Line Limited has a plant which costs 40,000. It was purchased on 1st January 2013 with a useful life of 10 years. There's no depreciation. So 1 year depreciation will be what? 40,000 divided by 10. That will be 4,000. That's what you have to do. So in exams, whilst reading it like this, first work is depreciation. This is how we answer examination. So imagine you've not done IFRS 5. Hey, no matter what you do, divide this by these years. Put the answer down. They will mention another year again. They will mention another year. Multiply, find the distance between the first year and then the second year they will mention. Multiply by the depreciation. You get the answer correct. If you follow this step, that's how we solve exam questions. So please, in one of the models in class, I normally have to walk you through how you can solve any IFRS question, even when you don't even understand that standard. It doesn't matter. You don't need to understand everything, please. So we know the depreciation. The plant was being used as part of the business operating capacity. On June 2015, Suffolk Line Limited made a decision to classify the plant as held for sale, and an agent was appointed for sale of the plant, and that have started advertising plant and at a selling price of 29, no problem. So first thing, what you have to do is that first, find the current amount of the plant as at June 2015. That's that they bought January 2013. So how many years so far? January 2013 up to January 2014, 1 year. From January 2014 up to January 2015, 2 years. Until 30th June, 2.5 years. So what do? Find the current amount. Find the accumulated depreciation. So multiply 4,000 by 2.5 years. You get 10,000 or so. And that's the accumulated depreciation. Take it off from the 40,000. You get what? You get 30,000. So that's the current amount. Compare it with the fair value cost to sell and do the recognition. Hey, that's all. Just compare and do the recognition. So at a selling price of 29, that's the fair value cost to sell. The selling expenses are estimated to be 1,500. Good. So now, subtract 1,500 from 29. What do you get? The question I said I will not solve, I finished solving it too. The question that I said I'm not solving, I'm done solving it. You see? So question like this, yeah, you write plant, carrying amount, CA, fair value, let's go to solve. So what's the fair value? It's 29,000. Cost to sell is 1,005. So what's the answer? What's the cost of the asset? 40,000. What's the accumulated depreciation? Me, I've done my calculation. I had 10,000. You can do your own. Confirm for me, okay? If it's different, let me know. How I got it, only God knows. Let's go. Here's 30,000. Yes, well, 29 minus 1,005. What answer do you get? 29 minus 1,005. 29 minus 1,005. This is what you get. So you get 27,500. But this accumulated depreciation, you confirm for me. 4,000 times 2.5. Is it correct? Is it 10,000? 2 will give us what? 8. Half will give us 2. 10,000. Yes, true. That's correct. So what should be the value? So initially there must be impairment. Don't forget, impairment only exists. Impairment of what? 1,005 exists. You record. It's you. They say something here that the asset has not yet been sold by the year end. As at 31st, not 2015. It has a fair value. Let's cut it off for 24,000. Oh, further reduction. So what do you do? Another impairment. So that's resolved. So now, as at the end, this one is as at the time. This is as at 30th of June. So this is 30th June. 30th June. Impairment 2015. Let's go to 31st December. As at 31st of December 2015. So the plant, we need the carrying amount. We need the fair value, less cost to sell. Now the carrying amount will be stated at what the old correct value. That's it. This should be the value 27,500 because it's lower. So the carrying amount is 27,500. They told us the new fair value less cost to sell is what? 24,000. At the end of the day, which one is lower? Still 24. So there's a further impairment. Further what? Impairment or additional impairment of, find the difference for me, 3,500. So in total, what's the total impairment? No, I'm coming over. Who lied to me that 30,000 minus 27,500 is 1,005? Who lied to me? Please, kindly get me the correct figure. It's 2,005. Thank you. So here should be 2,005. You see how this is level 2 question, not level 3. So 2,500. These are for those who are doing advanced audits. So 2005, no problem. So this 2005, all what you have to do is that you just have to, as what's the total impairment for the period? Total impairments 2,500 plus 3,005. What do you get? 4,000. So that would be 6,000. So the P&L, you kick 6,000. This one goes to balance sheet. You are done. I'm done with this question. Next question. So I said I will scan. The next question, please, I'll not write. Next question, please, I'll not write. This is the question I'm looking for. Attaque. Thank you. Attaque. This one, I want you to do it for me. Try your hand on attaque. This November 2017. Financial reporting question number 2, November 2017. This attaque. I like this question. Oh, it's not this one. This one, no. This one, no. Attaque. 4 marks. Attaque. This one. Attaque. 4 solid marks. Someone wrote this question. Financial reporting. Now let's go straight to the game. It said required. Please don't read anything here unless you are done with the requirement to. If you read, it will be a mere story to you. It's meaningless. All our questions, the storyline, it doesn't click. There are several meanings you can deduce from it. So if you go and waste time and read that, you have a lot of thoughts will come into mind. Please, don't do that in exams. I'm begging you. That is why target. I sat down to develop models in exams. I have a particular video on YouTube here. Please get that video and then watch. I have all the tips in answering examination questions. One of them is called RAT or RAF. Read the requirement first, additional information, trial balance of financial statements. Another model developed by target is also known as what? 1 known is never equal to 1 unknown, but 5 known, now they are equal to 1 unknown. Or some of our models, all of them, I took my time to explain in that particular lecture video. So look for them and go through. It will give you a lot of insight on how to solve examination questions without panicking. See, no matter what, if you are prepared or not prepared, sit for the exams and go through these principles. In fact, even if you fail with a very good mark, honorable mark, and there's a chance for you to pass, even if the understanding is not there. Follow the principles and move on. So now, let's go to this question. Read the requirement first, please. I told you that this one will not write too. Yes. Calculate the carrying amount of the asset that can be classified as held for sale, assuming the relevant criteria are met where appropriate after applying the measurement rules of what? IFRS 5. What a wow. So IFRS 5, what a wow. What's the measurement rules of IFRS 5? We measure assets at the lower of what? The carrying amount and fair value less cost to sell. So this is the carrying amount section. All what you have to do, create another column for me. This is the open market. That's a fair value. This is a less cost to sell. This is a cost to sell. So now create another column. This side minus this side and put them there. So there will be another column. Let me see if I can do that here. So right here, fair value less cost to sell. So do your calculation for me. I said I will not write to 30.9 minus 0.5. So it will be 30.4 or so. 30.4 minus 0.5. 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 49, no, 50 minus this minus 1, that would be 49.5. Is that true? Oh, I want to clean up. So that should be 49.5. 24 minus 1, obviously 23. 10 minus 0.5, 9.5. That's the first thing you have to do. It's for those who understand IFRS 5. If you don't understand, forget it. You can still pass these exams. But now you have been able to go through it and then you are free to go. Now let's go. Investment property under fair value. At fair value through profit or loss, please. No, we cannot hold it. So it does not apply. Nope. Nope. It's outside the scope of IFRS 5. Don't forget the scope. So even at the level 2, IC examiners and ACC examiners and SIMA examiners are testing what? The scope, even at the level 2. No problem. So this one is not passed. So don't. Land used as company car park held under revaluation model. Yes, it can be. Land used. Now, between 49.5 and 49, which one is lower? Of course, 49. So you add this. 49.5 and 40, which one is lower? Oh, 49.5 is lower than 49. No, I don't think so. It's 49. Hey, examiner, you're using 0.5 in examination hall. But from 0.5 to 49 to 49.5, they are similar, okay? Trade receivable outside the scope. What a wow. Outside. Nope, don't touch it. What a wow. What a wow. Don't touch it too. Plant held under cost model. Yes. So from current amount of 14, fair value cost of 9.5, to select 9.5. So add these two answers together. So the answer is total current amount is equal to 49 plus 9.5, which is equal to 58.5. That's the final answer. 4 marks. You are done. That's all. This answer I will not solve it, but I'm not solving it. No problem. Any question for me? I'm going to my next question. That is how non-current asset they are. Any other question? Once this is due for exam, so both level 2 and level 3, you are going to get non-current asset held for sale. Practical question. And that is why we are looking at this. Okay. Let's continue with the storyline. I hope you get it very well. All these are not part, so those have cancelled. It's not part. Don't waste your time. Don't worry yourself. Realize that the questions are not strictly difficult. It's the understanding of the standard. So take your time. Let's use this to benefit from the entire storyline. Now, let me tackle my next question. This is the question I said I will solve, then I'm done. I think I'm done. Let me end here, okay? So that I can be able to, we can do other stuff. So that's all. Oh, let's see this question. This question here, please. This question here, you now have to tell me. This question here, please tell me. Oh, what is it? This question here, tell me. Just tell me. Please, the strategic case study group will start, I think, 30 minutes after we end so that we can rest for a while. Case study group continue. Now, look at this. Identify any two criteria to be met before assets can be classified for sale. They say an asset. They never said disposal good. So not the discontinued operation. Take notice, so this is not discontinued operation. So what are the two conditions? Number one. So two conditions. Number one, the value of the asset can only be recovered through what? Through sale, not use. So the value can be recovered through sale, only sale, not use. Number two, probable that the sale will be completed within 1 year, or the asset has been marketed for, buyer has been located, management is committed, active work, all those stuff. That's all. Condition is done. You see, we never read this story. It's not necessary. But we are now solving the question. That's all. Next question. Another question here. Ha. No. What am I seeing? Am I seeing well? Hi. You see, let me show you something. This question came ditto. You see, this question came in part 3. Now I've seen it in part 2 again. Let me show you in, this is part. Let me show you the year that it came, so that it can be very, very, very clear about this. Oh, just be clear. Give me just 2 minutes. Let me prove something here. Let me show you something nice, interesting. Which year is that? So get a year for me. Clear year. This is May 2020 financial reporting, ICA Ghana. Take notice, May 2020 financial reporting. Now let me go to the corporate reporting. So this is corporate reporting. Let me go to, I just want to show you something here. Go, this is corporate reporting. Let me go to the year so that you'll be very clear on certain things that I normally say. I made this comment before the beginning of the program. This is a special IFRS section. I made that comment clear that the ICA examiners communicate, ACC examiners communicate, SIMA examiners communicate across what subject, financial reporting and corporate reporting, all of them, strategic business report. This is corporate reporting, May 2018. So this is May 2018. Check the question for your eyes. This is May 2018, and it's what? Corporate reporting. Now go to the questions. So 2018, and all those who are writing financial reporting, I have a good news for you. Yes, all those who are writing financial reporting, I have a good news for you. So now check for your eyes. So now look, the II. A reportable segment. So the same question. Under the corporate report, it was 1 mark. This corporate report is CR, 1 mark. Let me go to the FR. Under the FR, it came in May 2020, the same question, without changing any word by word. Word by word. Ditto. So this is FR. You see, this is what? FR. Then number 2, a division of business classified for sale that was currently treated as discontinued operation last year, but have not been sold. I'm sure that one also came over. You see, This is due to still being referred to Security and Exchange. Look at what they did. Security and Exchange Commission, SEC. Let's go to the corporate. This is the FR. Let's go to corporate reporting. In corporate reporting, examiner, that's the third one. He made it what? We refer to National Insurance Commission. He only changing the National Insurance Commission to SEC. Because in Ghana, in financial management, that means the examiner is coming for financial management. There are 4 regulatory bodies that normally appear in our exams. Security and Exchange Commission, National Insurance Commission, National Pensions Authority, and Bank of Ghana. These are the 4 regulatory bodies that we have to look at them careful in financial management. What a wow. So you see, ditto what? Ditto. I'm done. I'll not continue again. If I say I'll continue, I'll review top secrets. Yes. Even in financial reporting, all financial reporting, there are ratio questions that come in financial reporting ICA Ghana. There's a particular year in corporate reporting that has been repeating. So if you drop in corporate reporting, it come in FR, and that is all. So join us and get more of this. We can probably give a specific years where corporate reporting questions have to come in what? Financial reporting. Ditto. This one is called permutation. Yes. Combinations and permutation. I'm done. If you have a question, kindly ask before I close the chapter of this edition. IFRS 5 is both for level 2 and level 3. Can we see that the same question has appeared in level 2 and the same question has appeared in level 3 without changing anything? How we saw it too? May 2018 and 2020. Okay. And that's all. Okay, so if there are no questions, permission to end here. If you have a question, you can ask. I will share the whiteboard with you, and we move on with the game. I will share the whiteboard with you, and then we move with the game. So please, if you have any question for me, ask before I close the chapter.